Whales are involved like hell. When the market actually shows you there are bearish patterns, there are bearish movements, you should be careful. You look at a 12-hour chart, you're watching bearish structures forming. Great. You jump onto a daily chart, and what you're watching there is supply on the upside. And whatever we have observed in the recent past is that whenever the supply comes on top, that's negative. It pushes the price lower. Maybe it's just to test a support to bounce off. But then, right now, you have both. You found liquidity at the top, the supply came in, now it's coming in at the bottom. Interesting. So there is a ton of whales, institutions, and corporations in the market who really don't want you to make money. Believe me, they don't want you to be successful financially. That's why in the crypto space, now you have them outside. Easy thing. Step back, look at what a 3-day chart suggests. Step back and look at what a weekly chart suggests. That's all that you have to know. Or you want to just ride the momentum? Look, the momentum is to the upside on a weekly. The momentum is to the upside on a 3-day. The momentum is still upside on a daily. So all the negative signals, you're not neglecting them. You're watching them. You're observing them. Why? Because you want to see if a bearish signal is then breaking bullish. Bearish patterns breaking bullish is a perfect thing to show you the trend is bullish. Now, one of the things which the SI family got when the price was here was the divergence. I shout out that divergence. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. Market is still favoring you if you look for the right signals. The market is calling you by name and saying, watch, these are the assets. Volume is coming in. Breakouts are happening. If you want to ride it, do it. But make sure you look at the big Baba, the Bitcoin Baba. If that's faking back lower, yeah, whatever profits you have taken, step out. But the macro perspective remains the same. This is the altcoin market on a daily chart, on a 3-day, whichever you want to take. This is a daily. And it argues the fact that it broke higher, it is retesting that, and it is trying to bounce off. But as we all know, standard deviations matter a lot. So you're plotting this particular line, which showed you that there has been a couple of times when the price did reach there, but then got rejected. Right now, you're almost at the verge of saying, no, I'm outside of that region. I'm bursting through that region. Great. So now you're watching the daily. The moving average says, I'm going up. I'm tilting back up. Now we go on a 4-hour chart. You want to look at the micro trend. The 4-hour says, yeah, I came back to the moving average, but I'm going back up. Now, if you're a bear or you're so conservative, you're observing this. Okay, there is a bigger possibility on a micro chart. Why can't this be true? Yeah, that's a head and shoulder. Because if you do put that perspective, then you're arguing somewhere here should be the support. You do this, you do the chop, you break lower, you come here. Yeah, that's valid. If you get a rejection here, that is valid. That's why I told everybody to watch Bitcoin. If Bitcoin is about to give you that fake out, then yes, you're watching that. For that, you'll have to zoom in on Bitcoin. Go micro. This is what the micro chart on Bitcoin shows you. This pattern, it broke to the upside. You had multiple tests there, which is the 1, the 2, the 3. And then you broke through that. Fine. And it's not just that. You got a retest. And right now you're going through that retest phase actually. We want to see it breaking back higher, continuing to the upside. Now if you look at Ether, Ether is still grinding to the upside. Remember our call back here? It's about to go up and it is going up. Now we go into a daily chart and you're like, okay, the last day was not that great. The last day showed you, I want to go to the downside. But then you look at this. That particular daily candle had more selling volume than the previous bullish day. Yet, that candle in itself ended up with a smaller price action. So that means, yes, sellers are here, they are back. They're trying to push the price down. But buyers are not stepping back. So the easy part, go on to an hourly chart and watch. Watch what? The moving average. On a 20, you put an hourly chart and use a 21-day moving average, which is kind of conservative. Now, look at which direction it's going. Is it actually trending higher? Is it actually slowing down? Or is it actually going down? Right now, it's saturating on an hourly, which means it's really choppy out there. Be careful. You step a little bit back to get the correct picture out of these noise and uncertainties. And you see, I'm trending higher. I don't care. There is a lot of volatility, but I'm trending higher. Before this happened, you can actually see the fact that there was a negative divergence. We took our profits, we stepped out, we waited for this. Yeah, we had to wait some time. That's fine. But then, what did the market show you? You're making a higher low, and then the price is making a lower low. So with a higher low, when you combine a lower low, that's a hidden bullish divergence. And that's on Ether. So I'm like, yeah, there's a lot of bearish news coming out, and still the bulls are showing you they are pushing back to the upside. So I'm like, okay, I want to see what a weekly chart shows me. And the weekly chart clearly argues I did give you an inverted hammer. Inverted hammer is a reversal structure. I gave you the follow through. So you got a morning star. That's good. And it's on a weekly, not on an hourly. That's perfect. So when your higher time frame structure argues it's going bullish and your lower structure argues I'm bearish, yeah, if you are in a highly levered trade or levered trade, you step out. We are riding this wave. Understand this. If you bought in here, you're not going to get that opportunity again to buy there because the market is trending. All that you need to look at is a weekly chart. And if you understand this, this is so easy, so clear. The market, say this is Ether on a weekly, showing you this trend line has been tested again and again and again and again. So that's July 2022, that's November 2022, that's October 2023, and here you are, September 2024. Each and every time you bounce off, you go for a ride. That's a rally in the entire market. That's one of the reasons why I say, come here, observe this. This is the altcoin market. On a higher time frame, put that on a 3-day, put that on a weekly. What do you see? Yeah, each and every time you come up here, you get a lot of liquidity. You get a lot of supply. Someone is selling, someone is shorting. But right now, are you getting that? That's the key part. Yeah, there is a lot of volatility. But watch the last candle close. So that's a 3-day chart, 3-day candle showing you there was a bigger volume in buying side of the equation, and that did end up pushing the price bigger. Fine. Till that point, I understand. I'm standing with the market. I'm walking with the market. Now that's a 3-day chart. If you are trading, then yeah, you're looking at the daily too. But if you're a long-term guy, you're not going to a daily, rather you're stepping back onto a weekly. What does my weekly chart show me? It shows me I'm at a support. I gave you this, a doji, and then I went up. So that shows me, yeah, bulls are trying to push it back higher, but it is still below the moving average. That's a concern. 1. 2. One weekly candle to the downside now took almost 3-4 candles to test that back. So I really don't trust the weekly bulls on Ether. Maybe something is going to go wrong for that particular project. Maybe it's just the way the whales want us to see that. But the breakout is going to give you the confirmation. You put that on a daily, put that on a 3-day, whatever you like. But remember this. If you get the macro pattern breaking to the upside, all the negative signals they gave you is just a fake out to trap you. So you decide based on what's confirmed in the market, not you're speculating on. So you go on here, you look at the 3-day and it says, I'm bullish. All that you have to do now with these assets which are trending, when it's above the moving average and it's breaking higher, follow the green candles. At least on a daily, that's okay, that's good. But whenever you get to ride it, you want to make sure you ride it just after the first candle close, not after 4-5 candle close. That's not good. Now, if it happens to be like this, 2-3 candles without much of a price action and then boom, it goes higher. Yeah, that's the momentum. That's the direction of the momentum. Now you join the party. You ride until there is a red candle. That's the easiest part to trade, to exit. You don't want to catch the absolute bottom. You don't want to catch the absolute top. You take in between and you step out. This is what we do in the SI family. And I give you each and every trade right now. We're going through multiple. And you can see one by one, we are closing the trades one at a time and compounding that. What's the importance of that? I see a lot of people saying, I want to buy more XRP. I want to buy more fundamental assets, but I don't have enough liquidity. The economy sucks. Yeah, I agree. But then when you look at this, that's millions, hundreds of millions of dollars running in and out of different assets. If you can put some glue on your hands and keep it there and take whatever your hands can, some hands would be small, some would be bigger, meaning your trade size can differ. You may be trading with $100, you may be trading with $10,000 to $20,000 per trade. That's okay. If you have 100,000 or a million, perfect. But remember, you need to compound. If you're small, you definitely need to be disciplined and you should be having enough information with you. No doubt, the patience, the discipline, and the right information for the right assets matter a lot. Say, we entered Blur, right? We did take a trade there. Now, why did we exit? That's a big question, right? When you enter into the market, and Bitcoin shows you a lot of different things, the market is conveying a lot of different actions. And this is exactly where we jumped out. Boom. Because that daily close showed me, there's a lot of liquidity pulling it to the downside. We exited there, then we saw the price going down. Now that 3 candle setup, that does not look bullish. But obviously, when the moving average is trending to the upside, the price action is doing this. The price action is doing this. Most likely, it's about to bounce off and create a great ride. If you're a spot rider, right, that's a perfect reversal structure. But if you're trading, yeah, you want to get onto the loop at the right time. If you're a spot rider, these are the opportunities which you're watching for. You're watching on a macro, you're riding them. And the SR family do have an edge in this game. Follow them, join the SI family. You get to see all my trades. You get to go through the one-on-one sessions to look at your portfolio and to see if you are in the right assets, at least in the right proportions, which is based on your expectations of what this market is about to give you. If you're looking for 100x and you are in one asset, purely fundamentals, that's not the right way. If you are looking for a 10x and you are in 100 small assets, whoa, the risk is too high. You need to understand what market is showing you and position yourself accordingly. So if you receive value, smash that like button. I'll meet you guys on the next video. Bye for now.